So we are excited for this evening's event. We want to make sure that we are all engaged. So if you have any questions, please feel free to drop them in the chat, raise your hand, and we will turn it over to our instructor. Do you want to introduce yourself to the ladies this evening? I know most of them you know, but we do have a few new people on.
Yes, good evening. For some reason, I think I've actually got Rashi's name typed in instead of my name. So I guess it must have been when I was logging in. Good evening, ladies. My name is Jermaine James. I'm at Citibank Field. I'm actually a VP for the Citibank Retail Services. Today will actually be the third session that we're going to be going through. I've actually had an opportunity to be in front of you for the last 2 weeks, and I hope that the information that we have provided has been beneficial and, definitely setting you on a path to achieve your financial goals. Today's presentation is credit report and scores. I just have to let you know in advance that this presentation, it does encompass quite a few more slides than previous presentations. I want to be respectful of your time, so I don't want to rush through it, but there's some sections where I'm just going to probably give you reference, and then it's something that you can look at even in terms of the participant guide, the pages that will have all the relevant information for the participant guides that you would need to have in place. So without further ado, I'm going to go ahead and start sharing my screen, and just give me a few seconds and we should be starting on time. All right, so all right, so as mentioned, Module 6, credit reports and scores, and let's get started. So with that being said, the first thing that we are going to kind of go over, and this you'll be able to see in page 57 of your participant guide, right? The participant guide should have been provided to you. This is a pre-training survey that encompasses a number of questions, and you just have to answer the questions true or false, or select the various options that are going to be provided on the actual sheet. Once again, page 57 as part of our pre-training survey. So with that being said, section 1 we'll be covering credit reports. Right. So as in previous sessions, here's what we've done. At the beginning of every section, we want to basically kind of outline what the key takeaways are. Right. So for section 1, our key takeaway is your credit history, can essentially affect, access to credit loans, jobs, housing, insurance, and other important services. Understanding your rights helps you to know how to protect your credit history, right? So the next page that we're going to be looking at is what is going to be in page 3 of your participant guide, right? Of the participant guide. So the things that it's going to ask you is just a simple question. Is this in a credit report? And it lists, there's 13 items that are actually listed on the page. You can basically kind of go ahead and cover that information on your own, but this is just going to be kind of a, just a quick check on your end to make sure that all the information that you're knowledgeable on what actually should be on your credit report, essentially, and anything that should not be on your credit report. So page 3 in your participant guide as well. So with that being said, let's get started. What is listed in a credit report? So the first thing is your identifying information, first name, last name, right? In most instances, depending on your last known address, that actually should also be listed in the credit report as part of your personal information. There may be instances where you've lived at multiple addresses. In most cases, that will also be information that would be accessible. In addition to that, what's going to be on your credit report is your debts, and of course, some of the bills that did require that is being reported to the 3 respective bureaus. That's information that you can also have on there. Public record information will also be listed, on the credit report. And of course, in most instances, this will vary from circumstance to circumstance. However, if you do have any public records against you, essentially that is reported to the credit agencies. In addition to that, last but not least, your applications for new credit, other inquiries. So any inquiries that you've done recently, right? It'll probably and whether this, in most instances, I'll let you know that, when you're going into, whether it's a departmental store or you're applying for a store credit card or any type of other credit card, anytime they do a credit check on you, there's an inquiry that'll go, right? Now, just from my experience and what I know, which agencies they pull this from is primarily based on zip codes, right? So essentially, for most people living in the greater Los Angeles area, Los Angeles County, and it's not to say it's primarily, but most creditors will go to either TransUnion or Equifax. It's not to say that Experian is excluded. In some instances, depending on the credit you're applying for, they could actually run, you could basically have a hit on either one or two of those, or possibly just a combined score that they would look at, right? So essentially, whatever's on your, if there's public record information on your Equifax credit report, chances are it's probably going to be on the TransUnion, as well as the Experian one. But essentially, just know that any new credit applications and inquiries will show up as a credit hit. And in most instances, most people will say if you ever hear people talk about a soft hit on your credit report, they basically saying, hey, there's only going to be a few points that may be taken out. The reality is that most creditors, anytime they run your credit report, that could be considered as a hard hit, right? And that, of course, will vary based on a number of factors as well as to how many points that inquiry will take off your total credit score. The nationwide credit reporting agencies, Equifax, Experian, and TransUnion, right? So this is, essentially where, your credit file history lists. And, most people, most credit card companies now that, if you're signing up for a new credit card, they'll give you an option to kind of, have a credit monitoring service in place that, in some instances could be free of charge. So depending on which, credit reporting agency it is, it could be a combination of all three. These are the ones that you should essentially, look out for. And depending on, which credit report you're pulling, the information that either TransUnion, Experian, or Equifax will put on the credit report could vary. And your scores could actually also vary from credit reporting agency to credit reporting agency. Just another important factor to keep in mind. So what is a credit score, right? So what it comes down to, it's a number based on information in credit reports, right? And essentially, your credit score just basically predicts payments of bills and debts as agreed. People with a higher credit score are likely to present a lower risk to creditors. People with a low credit score are likely to present a higher risk to creditors. So it's something really, really important to kind of keep in mind. And of course, depending on where your scores are, if anybody's in the 670s, 700s, 750s, 800s, 800s and above, essentially, those could be credit scores that are generally above what we would call the national average. So most creditors will look at that as you not presenting, any potential risk for anybody that could find themselves lower in a lower credit score. Chances are, even if it's either the credit application is denied, or if it is approved, they could be higher interest higher interest rates that could be applied to the credit that you're applying for. So the next important question we can ask ourselves is, who uses your credit reports and your scores, right? So essentially, financial institutions. I think I mentioned this on a previous session. I don't think there's any place now in the greater Los Angeles area, because whereas even if you're renting from somebody that may potentially be the primary homeowner, most people that own properties, most management companies that oversee properties are going to basically use a credit report and score to determine whether or not to actually lease or rent that property to you. Utility companies, will actually also use credit reports and scores. Some cell phone companies will require you to kind of do, a credit check. I mean, I can actually just tell you, it's kind of interesting because from past experience, I've gone in to do a phone upgrade with AT&T, and as part of the process, there's a notification that comes up and says, hey, just to let you know, before we actually process the upgrade, we're going to go ahead and do a credit check. So cell phone companies, even though you already have an existing contract with them, depending on the additional services they're going to be providing, they'll just want to make sure that it meets the minimum standards. So cell phone companies are also known to do that. Insurance companies in some states, will actually also use credit reports and scores. And then, of course, employers in some states, essentially, if you're applying for a job and they say to you, hey, you're going through the application process, when you're kind of looking at if there's a background check required, depending on how extensive it is, they may actually go to a credit report. They may actually, request you to give them permission to pull a credit report. And in some instances, they'd be good looking at, various information, including any public, information that's on that report as well. And then, of course, some state agencies or affiliated organizations will use credit reports and scores. So I'm sure you can see the list of, companies and institutions that, and organizations that use this is really widespread. So just doing everything you can to protect your, to make sure that the information in your credit report is correct. And of course, just, doing everything you can to have, higher scores moving forward is also beneficial. Right, then we're going to talk about risk-based pricing. So credit reports and scores may be used as one factor in risk-based pricing. So what does that mean? Lenders will set interest rates and other terms based on the estimated risk. Now, with that being said, they must tell you if they've used your credit report or credit scores to deny your application or offer you less favorable terms, which of course in turn could be adverse action notices or risk-based price notices. So by law, you have to be informed. However, it's also important to note that lenders could set interest rates, slightly higher than what the normal average rate is. So if they're looking at anybody that, hey, if your credit score is 750 and above, essentially, I'm just going to kind of throw this into, give an example. Hey, your interest rate is going to be 4%. For anybody below a 700 credit score, could be paying 6 or 8% for the same item, right? In most instances, if that's the case, you need to be informed of that as well. So, just in terms, so at least you have that information and you kind of know what the decision was, especially if the interest rates are going to be increased. So having no credit reports or scores, so what is determined as credit invisible, right? So for anybody that generally doesn't have, any loans or any credit, any type of credit out there, generally what that comes down to is, the result may result in having a harder time to getting a credit or loan, right? Renting an apartment, getting a favorable cell phone plan, in some instances, even getting a job, or turning on utilities without having to pay a large deposit, right? So if somebody is what is deemed as credit invisible, then these are some of the issues that they could run into. So essentially, having credit, is definitely beneficial because, if you are going to get loans or, looking at purchasing a home, sometime in the foreseeable future, or anything else where your credit report's going to be running, at least having some sort of visibility on that side and having a credit history, is beneficial as well. So with that being said, page 12 is, one of the participant guides that you'll see on page 7. And, it just basically asks you, do credit reports matter, right? So if you're looking at this on your participant guide, this you'll be able to find on page 7. In addition to that, credit reporting and your rights, you'll be able to see this on page 8 in your participant guide, right? So it's just reviewing the Fair Credit Report Act and then, basically answering the questions that have been provided.
And
Let me
just,
go ahead.
if I could just interrupt for a second. So if you've downloaded the participant guide, then you'll see the numbers at the bottom in the bottom right-hand corner. But if you're looking at it on your viewer, on your screen, then it might be page 9 and 10. So just make sure that you're looking at the page number in the corner. Okay.
Thank you. Right. So the next section we're going to cover is just, kind of focuses on opting out. Right. And this is just information that it's also important to know. You can opt out of receiving pre-screened offers, of credit or insurance, right? You can actually do it for 5 years or you can do it permanently, right? You may still get offers based on lists from other sources, right? If you opt out, you can't opt back in, but you can opt out, but you can't opt out of having a credit report, right? So how many of you, I mean, this is, like every day in most instances, you go out to the mailbox, right? And you go to take your mail out, and all of a sudden there's 3-4 envelopes, with all these pre-screening offers that have, that are put in place. Everybody's trying to offer you a credit card. Everybody's, giving you, telling you what you can get back in terms of, percentages for rewards, cash back, and all those things. If you don't want that, sent to you, then you can basically opt out, of receiving pre-screened offers. But, as mentioned, the one thing you can't opt out is of having a credit report, right? So that's something that's going to definitely, be on file for, for the time, for an extended time.
Forever.
So section 1, remember the key takeaway: your credit history can affect your access to credit, loans, jobs, housing, insurance, and other important services. Understanding your rights helps you to know how to protect your credit history. Okay, we're going to move on to section 2, and you're able to see this in page 11 of the participant guide. With that being said, let's cover our key takeaway for section 2. You can take steps to improve and manage your credit scores. This includes paying your bills on time as agreed. Really, really important, really, really critical. So we're going to talk about the basics of credit scoring, right? So the number calculated from information in your credit report, right? So generally, higher number on your credit score equals better credit history, right? Predicts the likelihood of payments, payment of credit obligations on time and as agreed. And, 2 significant factors affect your credit scores: whether you repay your debts on time as agreed, as well as your credit utilization rate, right? So really, really important to kind of keep that, and we'll talk about it more as we go through the training deck. So let's kind of talk about the more basics of kind of what the basics is like for credit scoring, right? So there's multiple producers of credit scores, right? You'll likely have multiple credit scores: FICO, Vantage, and others too. There's different models for the different types of credit, right? So based on what FICO does, what Vantage does, and of course, some of the other credit reporting agencies, all their models generally tend to work differently, right? But the 5 factors in the general FICO model are as follows, right? So how this is going to basically kind of outline what determines your credit score. So new credit accounts for 10%. Your payment history accounts for 35%. The amounts owed is 30%. The length of your credit history is 15%. And your credit mix is 10%. So this is how everything is weighted, right? So when you're thinking about your credit score, huge factor: payment history. 35% of your total score is based on your payment history. And then, of course, in addition to that, the amounts owed is 30%, right? So those 2 are really, really critical and important, right? So if you've got a good payment history, and in addition to that, in terms of your amounts owed and your credit utilization, those 2, payment history and amounts owed, account for 65% of what that total score looks like. So that's huge factor. So your credit utilization and your payment history are really, really important to maintaining and improving your overall credit score, right? So when you think about the order of your credit scores, right, may not be the ones that are used, right? If turned down for credit, right, you have the right to, to see the exact score that was used. Make sure your credit scores accurately reflect the information in your credit reports. So if you're applying for credit and you're denied and you request a copy of it, just reviewing that, you're getting a copy of it and kind of reviewing the credit report on what, what could have been the factor in terms of you not being approved. And of course, in addition to that, when you get the credit review, get and review the credit report and dispute your errors, dispute any errors that are on the credit report, and the credit agencies, give the opportunity to, you can actually do that. I think you can actually do it online now. In most instances, you just go in, file the dispute, and within about 30 days, that dispute will be noted. And then what they'll do is they'll go to the creditor and they'll give them, I think, up to 30 days to respond to the dispute. And then, of course, depending on what the outcome is, in most instances, if there's any incorrect information, it's either removed, or if it's an extended period of time, essentially both parties, are given the opportunity for you in your case, hey, I want to dispute this error on my report. And whoever actually, reported that will actually have to verify the information. And if they can't show sufficient documentation, then it has to be removed. Right. And in most instances, that could be anywhere from about 30 to 90 days for most dispute and errors to be resolved. With that being said, if you're looking at, page 12 of your participant guide, what makes credit scores go up and down? There's a few scenarios that you can actually read and, of course, ultimately answer the questions provided. So with that being said, we're going to ask them, the most important question. What is a good credit score, right? And if you've pulled your credit report recently, here's how you rank, right? So any credit score from a 300 to 579 is considered poor. If you find your credit score between a 580 to 669, it's considered fair. A good credit score is anywhere from 670 to 739. A very good credit score is from 740 to 799. And of course, if you are at an 800, congratulations, you find yourself in what is considered the exceptional score bracket, which is, definitely a huge accomplishment if you find yourself with an 800 above credit score. And this example that we've provided here for you is based on the FICO scoring. So just kind of, if you're looking at it, hey, you could literally be 1 point away from being fair to good. So if you're at a 669 and you pay down, you pay down your debt and you're paying your accounts on time, the next time the next month that your credit report is made available, you could find yourself in what is considered a good credit score. So just knowing where you are and what you need to do to be able to get to at least good, very good, and exceptional, is actually listed here. Just the scores for your reference.
We have a couple of questions.
Sure, go ahead.
So the first one, how often does the credit score change? So I can just tell you from personal experience that your credit scores will update each month. Okay.
So at least, and it varies, right? But I think for most instances, like within the first week of a new month, you get the update for last month. So you should actually be able to, if you're monitoring it, whether it's through like a Credit Karma or Credit Wise or any of these other ones that provide you the service, then essentially, where you don't have to pay for it, it should be monthly.
And then there was another question. This was, I guess, a couple of slides back.
Sure.
It says, how much is too much for amount owed?
It's a great question. And we actually, I think we may cover it later on, but I'm actually going to let you know right now. So let's just put this in perspective. Say you've got 4 credit cards, right? And based on your income so basically when you think about whatever your income is, your income to debt ratio is what a lot of people will look at, right? So in most instances, if 50% of your income is, if your debt is making up, if your total debt is about 50% of your total gross income, if you think about this over Spain, then that's kind of considered higher, right? But that could vary just based on what the amounts look like. However, if you've got 4 credit cards, right? And your total credit available is 10,000, right? Between all 4 cards combined, the goal is to at least stay between 30% and below of your total credit utilization, right? So if you've got a $10,000 credit card and you've got $3,000 on it, great, you're at the mark. But as soon as you say spend and take it to 5,000, now you're at a 50,000 credit utilization. Just being, just by going over that 30%, it'll impact your credit score, right? So the more credit, so if you've got a good credit line, but the closer you are to being maxed out on your credit cards, is going to negatively impact your score, regardless of whether or not you're paying those amounts on time. So the golden rule is just, if you've got credit out there, at least think about, hey, whatever my total income is, my total credit, at least about a 30% threshold, is definitely looked upon favorably. Because if your debt is 50 to 60%, in most instances, nobody, you might be looked at upon as kind of being an upside down, and most people won't even want to lend to you, despite you're paying it off on time, paying your bills on time. They'll just look to say, hey, you've got $20,000 worth of credit cards, and you had 16,000. You're above the 50% threshold, so that could also just put you in a situation they look at you as a potential risk. So I hope that answered the question.
And there's one more question.
Sure.
Is it better to pay your cards off in full or leave a small balance to show utilization?
I think as long as you're keeping those balances below 30% at any given time of whatever the total credit amount is owed, it's going to work in your favor. So if you want to pay it all the way down, great, right? But just knowing that, if you're using the card at the beginning of the month and you're paying it off at the end of the month, hey, that shows a positive payment history, and it shows good utilization. So you can bring the balances down as low as you want them to be. The one thing you just want to not do is kind of have your credit balances above 30% of what the total credit limit is.
And then there's a follow-up question.
Sure.
This one is asking more about achieving the perfect score, and how is it that paying every card off in full and not having balances does not allow for a perfect score?
Well, I think they'll also look at your credit mix. I think it's going to be tested. So the 5 factors. Remember, we looked at credit, we looked at new accounts, your overall credit mix. What was the other one? We looked at your utilization as well as your payment history. The 5 factors that are listed is what will determine whether or not you get to that exceptional score. So if you've got, existing cards, and you apply for new credit, hey, that could potentially move your score up. It won't hurt you, right? So you don't want to have too much credit out there, but just having a good credit mix, right? So a mortgage, possibly a car loan, some, maybe departmental store cards or anything else related to it. A good credit mix and a good payment history, as well as a low credit utilization for all of the respective, credit that's been issued to you, will put you on the path to achieving exception.
Yeah, okay. And then Rosalind has a question. Rosalind, if you wanted to unmute yourself, you can do that.
Okay, so I'm the one who asked the last 2 questions. I never pay interest, and I use my credit cards all the time. I use them. Okay. I pay them off. I used to pay them off as soon as they just send me the thing. I said I would pay it off. Now I'm trying to learn how to wait to pay them off. But somehow when they're looking at the credit report, if you paid it off, they don't see your activity at all. So then I start trying to leave little balances, because I'm like, well, how come I don't have an 850 score? I don't have any debt. I don't have any, I never leave balances. Right. So I didn't understand that.
Yeah, no, and I appreciate you bringing it up, Rosalind. So yeah, so when we talk about credit utilization, having some sort of a balance on your card, right, will kind of report back to so the thing is, if you open up a card and maybe you put a large amount on it, right? So maybe you get a new credit card and you got a $5,000 limit, and maybe you're spending like between $500 to $1,000 a month. But you basically at least keeping your balances are not exceeding 300. Remember, just think about the 30% rule, right? So whatever your credit balance, whatever your total credit available is, keeping it at 30% or less, or even just at 30% month over month is not going to impact you, right? As long as you're making the payments and even making slightly more than what the minimum payment is, to your point that you mentioned, you're not paying interest. That's great, right? But just having your utilization to where it's showing that there's an active payment, that the cards are being used, there's utilization, the balances are at least, below the 30% threshold, that will definitely get you to where you need to be from an 800 to 850. And then, of course, just making sure that even in terms of your credit mix, how many cards do you have? What do those balances look like? And if you're applying for new credit, how does that kind of factor in? It's just want to make sure that, all those things are kind of taken into consideration. And FICO, I mean, I'll be very honest with you, FICO, the way FICO does the algorithms, vary, because in one instance, you'll see your credit report jump up by 24 points. And you'll be like, oh, great, right? That might put you in a different threshold. And then all of a sudden, you go to do, maybe you apply for some new credit, or, if there's any issues, or maybe a slight late payment, and then boom, even though you've got that positive payment history, the scores, the algorithms for the scores will vary, will kind of, determine what that looks like. But it's just kind of thinking about, the slide that I shared earlier, payment history, utilization, new credit, as well will kind of will factor in. But your utilization, your payment history over the course, month after month, is really going to be what's going to drive you up in terms of scores. All right, so I guess we'll move on. So just remember section, 2 key takeaway. You can take steps to improve and manage your credit scores. This just includes paying your bills on paying your bills on time and any of the other credit obligations that you have. So section 3 is getting and understanding your credit reports and scores. So this will be on page 18 in your participant guide. Right. So the key takeaway here is, get and review your credit reports at least once every 12 months to make sure the information is accurate. With that being said, the question we're going to ask is, what is a productive credit history? Right. So productive credit history, here's what it looks like. So the rights to free credit reports. One free credit report every 12 months from each nationwide credit reporting agency. So that's Equifax, Experian, and TransUnion. You can go to the annualcreditreport.com, the official website, to fill out the order for these free credit reports. So you are allowed one free credit report from all 3 reporting agencies over the course of 12 months. And you can actually just order this through annualcreditreport.com. So very, very important, website to kind of notice. If you haven't looked at your credit recently and you haven't actually requested a credit report, by all means, go ahead and fill out the information. They'll send that to you. You can do the requested mail, and I think sometimes they can actually do it digitally as well. Right, with that being said, part of our section 3, discussion, watch out for imposters, right? Otherwise, others that advertise free credit reports, credit scores, or credit monitoring are not part of a legally mandated free annual credit report program. So very, very important to remember. You can get your credit report from all 3 agencies, one free credit report, over the course of 12 months, right? Often free services convert to ones that you have to pay for after the trial period, right? So if somebody says, hey, if you get something in the email, hey, we can get you free credit reports, and we've got a credit monitoring service, that's available. Always kind of read the fine print and make sure you're not falling into a scam, because ultimately you can just go directly to the annualcreditreport.com and request your credit report from Equifax, Experian, as well as TransUnion. So be very, very careful of all these free services out there, and anybody that that's not part of that's not legally mandated or part of the reputable agencies, as just like going directly to the ones that we've already spoken about, because that could end up being a cost to you. So page 19 of your participant guide will basically cover getting, my credit reports, applying, getting my credit reports, the information that's kind of listed, and it kind of just walks you through what information you need to provide, which credit reports do you want to, and then, which credit reports are you looking for, And then, of course, you know, the information they'll be able to send you. So page 19 in your participant guide. Right, so the right to additional free credit reports. How can you get additional free credit reports besides the one free one that they actually provide to you? Well, if you receive public assistance, if you're unemployed and looking for a job, if you're a victim of identity theft or financial fraud, you can get additional free credit reports. State law that provides for a free credit report. And if you've been denied credit service, an apartment or employment, if at any point you find yourself in one of these situations, hey, unfortunately, we're not going to be able to rent this to you because, you know, of information, you know, just based on your credit scores. Hey, guess what? Can you please provide me, you know, at that point, okay, you're going to go ahead and request a copy of your credit report, you know, based on the situation. So at least you can actually see what was listed on there. You know, if you denied employment, you have a right to an additional, you know, credit reports to be provided for you. It's always good to know what's on your credit report. So at least that way, if anything comes up and you need to dispute it, or even though if the information is incorrect, then, you know, you can put yourself on a path to get that fixed. So what sections are in credit reports? Let's talk about those. You know, personal identifying information, public records, accounts assigned or sold, credit accounts, and inquiries. These are going to be the 5 things that are going to be primarily on the sections that make up your credit report, right? Any credit inquiries that you've done. So if you went to Macy's, applied for a credit card, left Macy's, went to Kohl's, applied for a card, you know, then, you know, maybe applied for a credit, all the inquiries that you are submitting, you know, where a credit report is required, those should be visible on your credit report. Now, with that being said, you know, one thing you don't want to do is have multiple inquiries, you know, going on. So if you've applied for credit at one establishment and maybe you didn't get approved, essentially, if you're going to go ahead and apply elsewhere, just remember, every inquiry, most people will say, you might hear the term soft. Most inquiries are what we determine as hard inquiries. And depending on the number of inquiries that you have within a given month, right? The total number of inquiries could affect your credit score. So if you got 5 points taken off here, 7 points taken off there, and maybe you're going to apply for the third item, and that's an additional inquiry, and that's, you know, an additional 5 points. So if you know, applying for, you know, multiple credit cards or store cards, whatever the case might be, just kind of do it and understand that excessive applications will impact your score. It will impact your score negatively because every inquiry is going to, you know, basically take additional points off your credit report. So very, very important to kind of keep in mind. Page 25 in your participant guide will, you know, basically, you know, give you an opportunity kind of reading a credit report, you know, read the scenario and answer the question based on Ray's credit report. And of course, you know, you can find it after the questions as well. You know, page 29, reviewing my credit reports. That will also be in your participant guide, you know, so basically review my credit reports. You can use this checklist to review your credit reports. If there's any inaccurate or outdated information, file a dispute, and here's what to look for. Getting your credit scores, right? So some nonprofit organization, you know, credit card statements or websites, when you have a right to a score, and then of course, FICO, you know, we'll be able to give you that in terms of your credit score, as well as Vantage, right? So the 3 nationwide credit reporting agencies will be able to provide you, you know, your credit scores. And the information's there. So if you want to write that down, you know, www.myfico.com and vantagescore.com, just for future reference. Section 3, key takeaway. Get and review your credit reports at least once every 12 months to make sure the information is accurate. All right, we're going to come over to section 4, which is disputing errors in your credit reports. And you can see this in page 32 of your participant guide. Section 4, key takeaway. If you find errors on your credit reports, file a dispute right away. Be sure to keep records and follow up, right? So any disputes, file them. So at least that way you're giving the credit agencies an opportunity to go ahead and investigate. And then of course, we're always looking for a resolution. Right, so when we think about errors on your credit report, what are they? Identity errors, incorrect reporting of account status, data management errors, balance errors, as well as outdated information. Right, so when we think about this, in some instances, let's talk about identity. Even just a misspelling of your name could be something that could result in an error. Right, a balance error. If you know that you've satisfied payment and you've paid the credit, so maybe you may have had just kind of give you a situation. Maybe you had something that went through a collection agency. You came to an agreement, you set up a monthly payment, you paid it off, and they agreed to report it as paid in full. In some instances, they agreed to basically have it, removed, after you have paid in full, but you go to pull your credit report and they're still showing that, there's a credit reporting agency on there with the balance. Any outdated information, at that point, it's very important to file a dispute, because these errors could have, a negative impact as well. So just keeping, that information and knowing and reviewing it for accuracy is really, really important. So when we think about time limits on negative information, generally can only be reported on credit reports for 7 years, right? So that's kind of the general duration in most instances. So if you had an issue, more than 7 years ago, essentially after 7 years, whoever the creditor is, they can't report it thereafter, right? So of course, if it's going to take that long to get it resolved, then it's going to definitely have an impact on your overall scoring. But time limits on any negative information is 7 years. It's set at 7 years. Some bankruptcies are an exception, so that's also something to kind of keep in mind. If somebody's filed for bankruptcy and it's been reported, that they could be certain exceptions where it's actually kept on there much longer than the general 7 years for any negative information that could have been initially reported. No time limits. So there's no time limits for negative information when someone applies for a job with a yearly salary of $75,000 or more than $150,000 worth of credit, and life insurance with the face value of $150,000 or more, right? So there's no time limits for negative information when it applies, when the three scenarios, based on the three scenarios put on here. So salary of $75,000 or more, $150,000 worth of credit, and $150,000 of insurance policy. So there's no time limit for that. The 7-year reporting period, can be confusing. It generally starts 180 days after you start paying on the debt, right? So if you are in default and maybe there's, collection calls that have gone out to you, there's, letters that have been sent to you, and at that point, it still hasn't been resolved, 180 days after that payment, that last payment is received, is generally when that could be reported. That could be part of the 7-year reporting period. So I'll give you an example of the 7-year reporting period. So August 2018, you're 30 days late. November 2018, you're 120 days late, and the creditor closes the account. Right? So in August, the delinquency started in August, right? November, was kind of the 120 days. July 2018 is the month before that. So what'll end up happening is July 2018, right? Plus 180 days equals January 2019. January 2019 plus 7 years equals January 2026. January 2026 account is no longer recorded, right? So from July, 180 days after the last payment, which now basically, takes them 6 months afterward, it's reported. At that point, once it gets onto your credit report, chances are that could be, part of the 7-year reporting period before it's no longer reported. So the goal is to just try to avoid any situations where you've got any accounts going beyond 180 days. And if before it gets to that point, if you can come to an agreement, a resolution, a monthly payment, whatever the case might be, That's really, really important because anytime, it's put onto your credit report, just think about it. 7 years is a significant amount of time. And in most instances, they have that entire 7 years before the account is no longer reported.
Okay, so we have a couple questions in the chat.
Sure.
The first one is, what do you mean by no time limit?
So no time limit. Let me just go back and look at the slide real quick. So no time limits for negative information when someone applies for. So that means if we look at the previous, so the initial time limit is based on negative information. It's 7 years. Bankruptcies are an exception. So when we talk about no time limits, these are the three situations where they don't really have. I mean, this could be reported beyond 7 years. They're not confined to keeping this within the 7-year period. Does that make sense?
Yes, I know that does make sense, but also when you're talking about in the next slide about the 7-year limit. So basically this supersedes the 7-year limit if for those three categories. So regardless of 7 years, I think was it 2026, you could
Yes.
still find if you had a negative blemish or for whatever lack of better term
Yes.
on your report. Like in
Yes.
2026, they could still see that there was a late payment back from, what was it, like 2019 or 2018?
Correct.
That-
Right.
Wow.
Yes.
So you're kind of like pigeonholed in, like it never leaves your credit if you fall under those three categories.
Correct.
Okay.
Yes, ma'am. Thank you. Appreciate the question. Any other questions before I move on?
Yes, I have one if you don't mind.
Sure,
So
go
you're
ahead.
saying if I get a $75,000 job basically, and the employer runs my credit report, then they have access to see things that under normal conditions, a creditor or potential creditor would not see. That's what you're saying. Am I correct?
That is correct, ma'am.
Okay, thank you. I just wanted to make sure I understood you correctly.
Yes, yes. Thank you. Thank you. Yeah. So basically, those three categories. I mean, if you're applying for $150,000 worth of credit, chances are, they'll be able to, they'll have visibility to it. So yes.
And then we had another question. Does that
Sure.
reset if you respond and speak to a collection agency?
The 100, you mean the 7, are we talking about the 7-year time period or the 100, which are we talking about the 180 days? Because I'll be very honest, once it's gone to collections, at this point, the account's being sold. So yes, you do want to kind of have it resolved, but the goal is to avoid any accounts going to collections.
Okay,
If
so
you
if
get-
it,
Yes,
so if it goes to collections, then there's the 7-year time period reset?
so if it goes to collections and the collections goes to the initial credit and says, hey, this person is going to paying this off, great. And one of the stipulations that you have is, hey, once I paid off, can you remove it completely from my credit report? Then you won't have to worry about it. It'll be like it never existed. So that is something that you can, set up with the collection agencies. But the goal is the longer it's sitting in collections and when it's reported to collections, because you could go to collections, but the collection agents may have not already reported it. The original creditor may have reported, but once the collection agency now goes ahead and reports it, they basically saying, hey, we're taking control of this debt. And now that's an additional negative report on your credit report. So think about, you may have already, I'm just going to use it. So maybe you had a card, maybe you had a credit card with the retailer. The retailer says, hey, you know what, it's accounts delinquent, we're closing it. They sell it off to collections. They're reporting. Collections basically says, hey, you've got 30 days to respond to this, and let's go ahead and get this disputed. That period passes. The collection agency now can actually report that to the credit agency, saying that they've taken control of the debt. So that's why you'll find you might have the original creditor, and then you'll have these collection agencies that'll show up. But both of them can basically impact and have a negative impact over the 7 years. So I don't know if that answers the question.
Yeah, in question. So once you pay, or let's say you resolve it with the collection agent, does it
Mhm.
remain on your credit? Or after it's been taken care of, is it removed, or do you have to?
So I mean, I can tell you, ladies, I'll be very honest. I've had a situation before where, you know, years ago, where I found myself dealing with the collection agency, and it negatively impacted my credit. And when I actually did come to paying it off, I actually said, okay, you know what, I'm gonna go ahead and pay this off, you know, and take care of it. One of the stipulations that I requested was, hey, I'm gonna settle this debt, right? Can you report? You can actually go to the credit report agents. I said, hey, what I would like to do is basically report that this debt was paid in full. In addition to that, can we have it, you know, removed from my credit report? They have the ability to do it. The only thing that you have to do is you have to ask them to put it in writing. If they just verbally agree with it over the phone, at that point, you don't have anything. So if you can ask them to put it in writing, that once the debt is settled, so they'll basically, so here's my situation. I said to them, okay, I'm agreeing to paying this off in the next 12 months. Great. Here are my monthly payments. Great. Here's what I have to pay every month. Once I've paid off in full, can I have this removed from my credit report? Yes. Can we put this in writing? And they actually sent me a letter saying, once the debt has been satisfied, it will be removed. And it was like it never existed. So you do have that option. The credit agencies, the credit report agents do have that option to do that.
Okay, then we had two more questions. So the first
Sure.
one, do you have to wait the 7 years if you meet those requirements?
If you meet, which requirements are we talking about? I just want to be more specific. When we say which requirements, are we talking about the 180 days, or are we talking about the 3 no time limit requirements?
Let's see. Who asked the question? Can you give us clarity on the question? Is it the 180 days or is it the 7 years?
Yes, I was asking, and can you guys hear me okay?
Yes, we
Yeah.
can.
I was asking regarding the no time limit.
Yes.
If you meet those requirements,
Mhm.
I was a little bit confused, but I think you clarified that pretty much if it's one of those 3 items,
Mhm.
regardless if the 7 years have passed,
Yes.
if it's one of those items like a job that's over 75,000, they'll still be able to see
Yes.
that debt was on there.
Yes.
And then I have a follow-up question. Now, after the 7 years has passed,
Correct.
and it falls off your credit report,
Uh-huh.
can they sue you? Because I've heard that even after it falls off your credit report for the 7 years, that the collection agency, because normally it goes to collection, that the collection agency can try to sue you to collect.
I mean, I guess it'll vary. I think it'll come down to what, you know, the debt is. In most, you know, depending on who you actually owe. In some instances, they could they could basically file, they could be, a levy put on your bank accounts to recover it. So they could go that route. They could basically file a case against you. That means that it'll basically go through the legal system to say, hey, we're trying to recover this debt. And once they do that, in most instances, depending on where it is, unless that payment is made, they could essentially just go into account, levy your account, like basically put a levy on the account and, seize whatever funds that they can get available. The whole thing that they're trying to do is, recover their money. So it can get to that point. And that's something where, if it's not being paid, if you haven't met the full debt obligation, then chances are you are leaving yourself open to a possible further legal action, even after it's off your credit report. Because creditors, ultimately they want to, recover the money. Because when a credit collection agency is following up for a recovery of a debt, they take ownership of that debt. So they already said, hey, we'll basically take the debt we buy the debt of the original creditor, and now we need to get this money back. So ultimately they want to get paid because of the arrangement that they've had, with the original creditor. So you don't ever want to get to a point where it's something that's not being resolved. If there's anything on collections, try to get it resolved before it goes to any legal action, because at that point they do have, the grounds to pursue that against you.
And
But
then
if you paid it off in full and you can show proof that it's paid off in full, then there's no legal basis for them to go after you because you've satisfied the debt. Sorry, go ahead.
And then we had another hand raised. I think Tunde, you had your hand raised. Did you have a question?
I did. So I was going to ask about the fact of collections where, you know, they've sold your debt. So
Uh-huh.
you actually don't owe your original creditor. And so you're saying that the individual is still accountable even though the debt has been sold, basically, if I'm understanding you correctly.
So I'm just going to use, so like say you got a credit card through Capital One, right?
Right.
And then you were delinquent on your Capital One credit card. And 180 days, Capital One says we're closing this account. It's done.
Right, I understand.
Okay. Now, Capital One still wants to recover their money. So once Capital One sells it to the credit collection agency, at that
They
point,
wiped it off their balance sheet. I understand that.
yes, yeah. So at that point, the credit collection agency is taking control of the debt. They own it. They literally have basically saying, you've sold it to us, we own it. Now we're going to go ahead and recover it. So it's in most instances, here's what could happen, ma'am. You could basically say, hey, you know what, let me go back to the original creditor to kind of get this resolved. And in most instances, they'll tell you, hey, here's a credit agency to contact, the collection agency, because they don't have ownership of it no longer.
Right.
Yes, ma'am. So I hope that answers the question. So with the credit collection agencies, once they start sending you notices and they start calling you, you know, to cover it, at that point, they're assuming ownership of it.
Thank you very much.
Thank you, ma'am. Appreciate the question. So we're going to talk about medical debt and credit reports. So medical debt generally not on your credit reports until unpaid for 180 days, right? So life happens, unexpected emergencies, large hospital bill that needs to be covered. Maybe maybe your out-of-pocket cost. That is not reported until unpaid for at least 180 days. And what this means is that it provides you time to resolve any billing disputes, make payments, or make payment arrangements, right? So if you dealing with the health, one of these health providers and stuff like that, and there is an issue and they say, hey, insurance, here's what your insurance cost was, here's what your out-of-pocket cost is. Normally when they send you a bill, they tell you, hey, this is what you have to pay, this amount we want paid in full, right? If you can't afford to pay it, then it's good to basically contact them and say to them, hey, here's what my situation is. I don't want you reporting this, right? So as soon as you get a copy of that bill, just make payment arrangements, do everything you can to satisfy it, because they won't generally report it on the credit report until it goes unpaid for 180 days. So look like, hey, the medical services were provided, insurance has paid their amount. Now you've got an amount that's outstanding. They'll send you the first notice, right? The medicals, they'll send you the first notice. Hey, paid. Here's where we are. Second month goes by, third month goes by. So basically what's happening is over the course of 6 months, they basically trying to get this resolved. And that is kind of looked upon as, fair amount of time to basically set up a payment arrangement before it's actually reported on your credit report. So let's talk about how to dispute errors on your credit reports. Option 1 is online. Option 2 would be by mail, right? So you can go ahead and do it online. And in addition to that, you can basically go through the normal process of just sending you by mail. And either way, once you file a dispute, they actually, the credit reporting agencies will then be required to, as I mentioned earlier, contact the creditor or the agency, the collection agency, to basically say, hey, we've got a dispute on file. We're going to give you 30 days to provide sufficient documentation pertaining to this debt or what you actually reporting. If not, then you can basically request that it be removed. So what can we include in these dispute letters? First and foremost, your complete name and address, the clear description of each item you're disputing and the reason for each dispute, and a request for correction or removal, right? Very, very important. Hey, this was on my credit reporting agents. This was on my credit report. Here's a creditor that's actually put it on here. The amount is incorrect. In some instances, you might be like, hey, I don't have an account with this particular creditor. So it could be an issue of, identity theft or anything else related to it. In most instances, if you find yourself in that situation and you're going through a dispute what they may require from the original creditor is proof of ID, as well as an application form that was filled out. Anything that you may have signed to say that it was you. So in most instances, you find a lot of people that have, been unfortunate and fallen victim to this identity theft, and people going up and opening up all these cards under their name. When they go through the dispute process, the person that issued the credit they now have to prove that you were the actual person that applied for it. And and of course, if they've got your name, and maybe they've got a full address, what form of ID did they use to apply for that? Was it anything, was the exact same driver's license number that you have? In most instances, a lot of people can, identity theft can be first name, last name, address, but when it comes to the actual proving identification, if the person that's processing the credit application is not doing due diligence and verifying that it actually is you, then in most instances, when you file the dispute, they may ask for an actual, application that was filled out, proof of signature that you provided. And if it's not there, then, hey, essentially you could request for that to be corrected or removed. Also really important to include supporting information. So send copies, but not originals, receipts, credit card or account statement, an image of a check, and a screenshot of the online transaction or automatic bill payment, right? These are additional supporting documents that you can provide. So with receipts, if you were charged the wrong amount, if it was a wrong amount stated, and you're like, my receipt says that it was actually only $1,500. Why is this being reported as $2,200, right? So really, really important to make sure that if you are providing any supporting documentation to dispute any of the errors on there, these are some of the steps and things that you can do to resolve it. In addition to that, if you've set up for automatic pay and it's going through your bank account, anything that you can provide as supporting documentation where there's an error, by all means, provide it. But one thing to do is never send the originals. So you can make copies, but don't provide the originals. Keep the originals for yourself. After you file a dispute, the credit reporting agency will send you a letter. The incorrect information cannot be put back, right? So check to make sure that if it is a dispute and was resolved, that's in place. You can request notices of corrections to be sent to the individuals or businesses that received your report, right? So if you filed a dispute and there was an error, and as a result, you were denied, credit or service or hey, once those corrections have been made, you can request to say, hey, please, the report can be finished to individuals or the businesses that originally received the credit report. So that's something that you actually have in play as well. Disputing errors on your credit report, see page 34 in your participant guide, right? So basically it's just disputing errors. You can use it to help you dispute errors on outdated information in your credit reports, what to do, and then of course the notes that you can actually jot down. So section 4, remember the key takeaway. If you find errors on your credit reports, file a dispute right away and be sure to keep records and follow up. Okay, so we're moving over to section 5, which is building, repairing, and maintaining a productive credit history. This will be a page 38 in your participant guide. So key takeaway, your credit history does not have to be your credit future, right? So developing a productive credit history, see page 39 in your participant guide. There's a scenario that you can work on, and then of course, answer the respective questions. So repairing and improving your credit report. So get and review your credit reports, dispute and correct any errors, pay all of your bills on time as agreed, use as little of your credit limit as possible. As I mentioned, staying below that 30% threshold is really going to positively impact your scores. Use a credit building strategy. So, hey, we don't just want to have credit everywhere. Think about the credit mix that you currently have in place, the total amount of credit you have available, the total amount of utilization. Having a balanced, a credit portfolio on your end is definitely going to help improve overall credit scores. Keep old accounts open if you can. So here's something really important. Remember that card that you opened 15 years ago and you've been constantly using it, and maybe it's got a limit on it and you've paid it down? That card that you opened determines the total length of your credit history, right? So even if you've got an old account, that a credit card that you're no longer using, and maybe you might have got additional cards, pay it off, pay the balance down, maybe use it once again. But the one thing you don't want to do is close that account, because what could end up happening is when you close the account, it's going to be reported, it'll report to the credit agencies as closed, but it won't list that you actually, it'll just say it was closed. It doesn't really go into specifics that you were the person that actually, requested the account to be closed. So think about your credit history, the length of your credit history, that first card that you may have had, as long as you've kept it in good standing, keep that account open, because that's going to show, positively for you. So maybe might have 15, 20, 25-year credit history in place. And, if, applying for credit only if you need it, right? And of course, in addition to that, one thing you can do, especially for you repairing and improving your credit, negotiate different, different terms, especially if there's a situation where you might have to be dealing with the credit, reporting agency. And in addition to that, just ask for the goodwill deletion. Hey, here's my goal. I'll pay this off in 6 months. Please, once I've paid it off, can you report this to the credit reporting agencies as paid in full? In addition to that, can you just go ahead and delete this from my credit reports? It never existed, and they do have the ability to do that. So it's something we can always ask for. So when we think about building an alternative credit history, document other payments you make regularly, such as rent, childcare, a cell phone bill, an electric bill, a gas bill, water, sewage, and garbage bills, right? All your utility bills that are coming in, just making sure that, hey, if your gas bill is coming in, don't fall into any situations. I mean, nowadays, gas bills, electric bills are so high with, with all the fees and this, with all the different surcharges that are put in place and the cost. But at least staying current on those bills will definitely be beneficial. When you think about a cell phone bill, right? In most instances, hey, you could be 30 days late on your cell phone bill. Essentially your phone bill is not getting turned off, but on the day the bill is due, if you want to set up like an auto pay, have an auto pay put in place, that could also, work positive for you. So the most important thing when you think about building an alternative credit history is just making sure that the items listed on your, that are listed here for reference, that you are in good standing, for all your water, sewage, and your utility bills, because that can definitely, impact you positive. In addition to that, hey, your television service bill, right? Your internet service bill, your Spectrum, hey, maybe you got insurance with State Farm, a loan from a family or friends, savings, all these things help to build an alternative credit history, and documenting those payments will be really critical. So the best thing to do, I always say, just a rule that I've learned and something I practice, if you don't want to fall behind, set up an auto pay, right? And then of course, setting up an auto pay means, hey, it's not something that you might have forgotten to do. As the bill comes due, it's automatically paid, and at least that way it'll be report positively for you as well. So we talk about building credit, right? So most people might find themselves in a situation where, they've had some unfortunate circumstances come about. They've got, some negative information reported on their credit report, some delinquencies, some charge-offs, some credit collection agencies. How do we build, how can we build our credit back up? Let's get a secured credit card. Get a credit building loan, right? That's also important. You can also, become an authorized user on an account. So, hey, if somebody, if there's a family member that maybe might have a credit card with American Express, and they put you as an authorized user on that account, and they already have a positive payment history, that account's actually going to be reported on your credit report as well, and that positive payment history will transfer across. In addition to that, hey, getting a cosigner is something you can actually look at. Applying for credit cards at stores, applying for credit at store or gas stations, generally, most instances, the approvals something that can happen, even though your credit scores might not be, in the good and above. So that's a good way to build your credit history, and then of course, just make a large down payment negotiating a loan for the balance, right? All these things can definitely positively help you rebuild your credit, right? So if you find yourself in that situation, just kind of know that there is light at the end of the tunnel. And in some instances, just, getting a secured credit card, basically you're depositing that money on there, you're using the card, you're paying it off every month, you're keeping that balance below 30%. And, hey, maybe you've got a store credit card, maybe you've got a gas station credit card. As long as, you've got that in place, that'll report positively and, impact your overall credit score on the path to rebuilding your credit. So when we think about building my credit, you'll be able to see page 42 in your participant guide, right? So you can use the checklist to explore the options for building credit, right? So building credit, what is it and what to watch out for? Page 46 of your participant guide will give you creating my alternative credit history. So what does this look like? Using the worksheet to build your alternative credit history, listing all your bills on there, and of course your payment, your frequency, and any other additional documentation that you can provide. Page 47 of your participant guide will show, will give you an exercise of repairing and improving your credit, right? So using this checklist to explore options for repairing and improving your credit, get and review your credit reports, dispute and correct any errors, make sure that, that anything that is in collection section account of your report belongs to you, make sure you're not, you don't have somebody else's information on there, pay all your bills on time as agreed. And if you have credit cards, use as little of the credit limit as possible. Carrying high balances on credit cards compared to available credit limits can significantly reduce your scores. So the experts advise that using no more of your 30% of your available credit is definitely good, and others advise no more than 20%. Either way, 20 to 30% of that total credit balance, that's where you should keep it on. So, you might be making the payments on time, but if your credit utilization is above 30%, it could have an impact on your overall score. Page 48 in your participant guide, maintaining my productive credit history, right? So there's many strategies for maintaining productive credit, as the same as those of repairing, improving credit. Use the checklist, in your credit history, on your credit history productive after you've built and repaired or improved your credit. So, hey, really, really important. The checklist, continue to pay your bills on time as agreed. Check. Continue to pay down your debt balances, right? Keep the amount of the credit you use as low as compared to your credit limits. Don't apply for too much credit, and avoid any actions or inactions that may create new entries in the public records, right? So that's really, really important. So if you've got too much credit out there, lenders may still look at you as being a credit risk, and they won't lend to you. So just as mentioned, just keep a good mix of keep a good credit mix in place. Store cards, credit cards, keeping those balances at 30%. Or less, regardless of the limits that are on there, will definitely be beneficial. So when we think about maintaining your credit, here's some key points. Pay your bills on time as agreed. We can't stress this enough. 35% of it, right? 35% of your total score is based on time payment. Continue to pay down your debt balances, right? If you've got a debt out there, whether you've got a $10,000 card, if you have $5,000, you have 50% of your utilization, pay the debt down. You can even use a strategy where, hey, what's the account, what's the credit card that I have the least amount on? Then you can also look at, hey, calculate like, hey, which credit card is really kind of costing me, is basically resulting in, higher payments because of the interest rates. Kind of think about, hey, making more than the minimum payments, paying down those debts it will all work in your favor. And just kind of set a goal, a realistic goal. Hey, do I want to have my debt? Do I want to at least reduce my debt? What's your plan to reduce the debt over the next 12 months, right? What does your existing debt look like? What's the plan to reduce your debt? So once you pay that down, that will definitely, work favorably for you. Keep the proportion of your credit, you use low compared with your credit limits. Can't stress that enough. A lot of people are maxed out, and even though they're paying those cards off on time, guess what? It's not doing anything to positively impact their credit scores, because essentially it's being reported that the card's almost at its limit, and that's impacting their score. Once again, don't apply for too much credit. Just keep it to a minimum. Avoid, as mentioned, avoid any actions or inactions that may create new entries. Pay your taxes and your child support in full and on time. check your credit reports regularly and dispute any errors. And most importantly, peace of mind. Keep good financial records for yourself, right? Know how much, what you've spent it on, how much you owe, how much you've paid, and what the balances should look like. Page 49 of your participant guide basically will be, getting help with your credit. So if you feel overwhelmed, by the steps that you need to take to read, repair, and build your credit. If so, you're not alone. You can get help, but if you need to be careful, because all help is not the same. Just making sure you're not falling to anyone that could be a potential predator out there. These imposters, all these people that promise these miraculous, we can get this resolved for you in 60 days. We can get you, back to, a 700+ score. At most instances, there's a cost associated with it, and you have to make sure that you read the fine print, right? So, you might get these people that say, hey, guess what? We notice you've got, you can apply for the loan, and, we can go ahead and pay this loan off, so you can, do a loan consolidation, bring all your credit into one spot. You only got to make one payment. But the question you need to ask yourself is, what interest am I paying on that loan consolidation? So that's another thing you want to look at. Always make sure that you know what's in the fine print, and there's not going to be any surprises, for you later on, because that's something that could end up costing you more money. Right, when we talk about getting help, right? So first and foremost, financial institutions, nonprofit, consumer credit counseling services, the housing counseling agency approved by the Department of Housing and Urban Development, HUD, financial education, nonprofit organizations, and then of course, certified financial planners, people that actually have the certification as CFPs, and then of course, anybody else that is reputable, right? So there is help out there. If you find yourself dealing with the situation and you're on the path to wanting to repair your credit and, get back on track, then, just getting some help, from a financial institution or nonprofits that is available to you, just doing the research and making sure that anybody that you're asking to provide a service, that, it is reputable and there's no potential risks. So let's talk about credit repair and debt consolidation. Credit repair companies promise to fix your credit for free. Debt consolidation businesses offer different services, often specialize in debt consolidation loans and debt settlement services, right? So I kind of touched on this. All these credit repair companies and these debt consolidations essentially just know what you're getting yourself into, because you want to use caution, right? A debt consolidation, what does this account to? You're taking out a new loan to pay off other debts, right? Doesn't address, they don't address the underlying cause of the debt. And debt settlement, right? When you think about it, working with creditors to accept lower payment and settle debt, and might have to pay income tax portion that was, income tax on the portion that was settled. So when you're looking at debt consolidation and debt settlements, always make sure that you are in the clear, right? And that whatever services are being provided or whatever, settlement is being offered, that, hey, you've got this in writing, right? Because at the end of the day, if you're going to work with the creditor to get a lower payment and settle the debt, once it's paid off, it should be noted as such, right? And whether this looks like 3 months, 6 months, a year, whatever the case might be, just always use caution when we're talking about debt settlements and debt consolidation. Anything you can do that you can get in writing that clearly outlines, what impact, it has, what impact it could have on you, if you miss a payment or anything else that comes along with it, is really, really important. Beware of, credit repair scams, because, beware of credit companies that promise to erase bad credit or remove other negative, but accurate, information. Promise fast and easy credit repair. Offer to create a new identity for you, and want you to pay up front. And last but not least, won't tell you what your rights are, right? If they can't meet, if the person you're dealing with, seems to kind of check off all these boxes, be careful, right? And a lot of times it could be something that's sent to you, in an email, and it seems like it's, something that's valid, or maybe you get a call, or maybe there's, a number that you that you're asked to call. Either way, just kind of know what you're getting yourself into. But anybody that's, going to make promises, fast and easy credit repair, new identities. Hey, yes, we'll go ahead and do this, but first and foremost, as part of our services, we're going to need you to, give us a down payment of $500. We're talking about clearing a debt. Why do we have to look at all these down payments? And is that really going towards the debt that you owe? And anytime they can't provide you information on what your legal rights are, then, scam alert is something that, should definitely, come to mind. When we think about protecting your credit history, right? So the initial fraud alert, active duty military alert, extended fraud alert, credit freezes, and credit locks, right? So these are all the things that different services that you can put in place to, protect your credit history. One thing that I've used personally is credit locks, right? I put a lock on my credit report because essentially if anybody runs my credit report and if I know that I'm going to go ahead and apply for a service, for a card or any credit services, then I'll remove the lock, right? At least give it about, I think it's about 24 to 48 hours before it actually shows that the lock is removed. In addition to that, guess what? When I go ahead and run the service, once I've got the credit approved, I go ahead and put the lock back on. If you've got a credit lock in place, it's just going to protect you, right? Anything that you can have where you're getting alerts, sent to you directly, really, really important, right? Because if somebody gets hold of your information, in most instances, they get hold of the information, they open up a credit card, they basically get the card sent to them. I'll tell you, I've heard of situations where, people have gone and opened up the information, changed the email address, given a different email address, the information gets sent to that email address, doesn't even get sent to you, basically puts down a different address than what's listed, what your current address is, all that information, the card gets sent to them, and, they go ahead and use the card. And then all of a sudden, a bill comes through, and now, it's not getting paid. And now you might actually have it, hit your credit report. And all of a sudden, if you see there's a credit inquiry on your credit report and you haven't applied for that particular card or service, by all means, possible, fraud alert. So just make sure that you're doing everything you can to protect your credit history. Key takeaway for Section 5, your credit history does not have to be your credit future, right? And if you look at page 54 in your participant guide, let's talk about taking action. What will I do? How will I do it? Will I share my plans with anyone? If so, who? And then, of course, ultimately, the your website that's provided below, fdic.gov/education, to learn more. And to round things off, you're going to have your post-training survey, which is in the participant guide of page 59. The post-training survey will have a list of questions that you can answer. I want to take this time to thank you once again. I know we've kind of gone over, but there was a lot of great questions that were provided. I did actually mention that this particular presentation does, have additional slides, but I hope that the information we provided today will be beneficial to you as the previous sessions that we have gone through. So I will stop sharing and open it up to any questions.
So if anyone has any questions, you can unmute yourself. And we do have a couple comments in the chat. Says this was excellent and thorough session. Thank you.
Thank you.
All right, so I think we are all set. We don't have any questions in the chat. Just a lot of thank yous. Thank you for the presentation. Great presentation. I really enjoyed it. So we are going to, if you could just tell everyone what our session next week is going to be.
All right, so I'm actually just looking it up right now as
Okay.
and I think our session week is financial education session number 4, and we're going to be talking about managing your debt. So managing debt is what we're going to be talking about.
Okay, so we will again post the participant guide on the website. And if you have any questions, please feel free to just send us an email. And you'll also notice if you copy the link, if you are interested in coming out for our membership event on February 4th, that's this Saturday at 2:30, that information is available. And if you are interested in joining us for our Economic Empowerment Tea, that event is on March 11th, and you can purchase tickets. If you know of anyone who would be interested in being a vendor, we do have that open, and the link will also take you to the registration for our vendors. And we want to thank you all for being here. We appreciate you taking the time to join us, and we hope this information is helpful and you can implement it in your day-to-day immediately. So you have a great evening, and we'll see you next week.
Thank you.
Thank you, everyone.
You're welcome. Thank you.
I'll see you next week.